So you just received a notice from the IRS that says you owe a bunch of money in back taxes. The problem is, you know you haven't filed a tax return in 6 years. So how could you possibly owe back taxes if you haven't even filed a tax return? The answer may be that the IRS filed the tax return for you. They may have filed a special type of tax return called a substitute for return. That's today's topic on the other side of the break.
1-877 Levy King, Levy Levy King, 1-877 Levy King, LevyKing.com.
What's up, guys? Corey Hankerson here from Legacy Tax, and they call me the Levy King because I've helped thousands of clients with unfiled returns, back taxes, tax liens, and that's right, IRS levies. If the IRS took your check, the Levy King will get it back. 1-877 Levy King, LevyKing.com. I'm also the author of In the Tax Nightmare, Insider Secrets to Beat the IRS and Reduce Your Tax Debt. Inside the book, I show you how to stop IRS liens, levies, and garnishments without paying the tax in full. How to set up the payment plan that you want and not the one that they want. And how to potentially settle your tax debt for less than you actually owe. In the Tax Nightmare has been a top seller on Amazon for years. You can purchase it for $19.99, but I want to give you a copy of the book absolutely free. Just go over to www.endthetaxnightmare.com and enter your name and email, and I'll send you a copy right away. 100% free. You don't even have to pay for shipping. Before we go any further with the video, please take a moment to subscribe to this channel and smash that like button so the YouTube algorithm knows you like this type of content. Also, hit that notification bell so you'll be notified each and every time we drop a new video on the channel. Okay, let's dive into today's content. Since you haven't filed a tax return in years, the IRS sent you a notice saying that they plan on helping you file. When you don't file your tax return, Section 6020 of the tax code authorizes the IRS to eventually prepare and file a tax return for you. Now you might be thinking, this could be a good thing since you didn't get around to doing your own taxes, so this takes the task off your plate. But you couldn't be more wrong. When the IRS does an SFR return, it's likely going to result in a balance due that's much larger than it would be had you filed your own taxes. This is because when they do an SFR, the IRS files it as though you are single with no dependents. They only claim the standard deduction instead of itemizing, and they don't claim any tax credits or write-offs. They simply take your income, which has already been reported to them via your W-2 or 1099, and produce a tax return for you. Wait, you did know that when your company gives you a W-2 or 1099 around tax time, they also give the exact same information to the IRS, right? Well, they do. Even if you don't file your tax return, they have all the information that they need to file the most basic of tax returns. But what they don't have access to is how much you gave to charity, how much you paid for childcare costs, mortgage interest, property taxes, etc. These are all huge areas that would reduce your tax liability if you filed your own return. But since you didn't file and let them do a SFR, you basically forfeited the right to claim all those lucrative deductions. It gets even worse if you're self-employed. This is because a self-employed person has the right to deduct their business expenses and only pay taxes on net income, which is after expenses, versus a W-2 worker who pays taxes on gross income, which is before expenses. I've seen self-employed people come into my office owing 5 or 10 times more than they should actually owe because they let the IRS file an SFR instead of doing their own return. Adding insult to injury is the fact that the IRS doesn't usually do an SFR until several years have passed since the date of the return was actually due. This means that when they actually do file the SFR, you not only owe the inflated tax balance, but also interest, penalties for failure to file, penalties for failure to pay, and also interest on those penalties as well. I recently did a video on IRS interest and penalties, link in the description below. But what's worse is when the IRS does an SFR when the balance is for multiple years simultaneously. Remember, in our example, you haven't filed a tax return in 6 years. So imagine the devastation when IRS does 5 or 6 SFRs at once and you suddenly end up owing a huge balance plus interest and penalties is bad, but owing a balance plus interest and penalties on numerous years all at the same time is much worse. And unfortunately, this is pretty common. Once the SFRs have been prepared and the balances have been formally assessed, you have a few days to pay. Otherwise, you move into collections and the IRS can hit you with tax liens, wage garnishments, and bank levies. The good news is that once you reach IRS collection, you have a whole new set of options, such as payment plans, currently non-collectible, and the offer in compromise. But that's another topic for another video. If you owe back taxes to the IRS or the state, I want you to know that there are special programs in place to help you get a fresh start and get out from underneath this tax debt. But how do you know if you qualify? You see, no two cases are exactly alike. So how do you know exactly how much you can settle for? Well, I've created a free tool to help you get qualified, that is, for a fresh start. Just head over to my website, which is www.levyking.com, or click on the link below and follow the prompts and answer a few simple questions, and we'll help you figure out your eligibility. That website again is www.levyking.com, or you can give us a call at 1-877-LEVY-KING. Well, that's it for this week. Talk to you later. Bye.